Panel here, and given the institutions that everyone here represents, I'd like to start our conversation by talking about the economics that are at stake. What does it mean in real growth terms to build an inclusive digital economy? Now, there's obviously a social aspect to this, and I'm sure that many of you listening are thinking about the commercial opportunities as well. But let's start with that economic perspective. So, Governor Chia, maybe first to you. How does digitisation and inclusion translate into growth for Cambodia?
I hope I could give you sort of a direct sort of linkages between digitisation and economic growth. But the path of digitisation in Cambodia has been quite short. And so we haven't done that yet. But just to give you some sense, when we launched our Bakong system, which is a payment system that creates interoperability between all the players in the country, within 2 years, the volume of transactions increased to about 100 million transactions. And the total value was all the electronic payment 10 times of our GDP. So that's really enormous. Of course, we were fortunate that it was launched during COVID time. And so everyone obviously were finding it very useful to transact during the lockdown. But without the numbers, I would just like to stress that, when we talk about payment system, oftentimes we don't understand or link between payment system and financial inclusion. It's a bit vague. Why is it that I make payment electronically would make me more inclusive? And the reason is that when everyone make payment, when you're very young, you make payment. And if you make payment with cash, fine. The problem is when at certain age, when you want to ask for a credit, right, a student loans or whatsoever, you have no history about yourself, and banks will be reluctant to lend to you. But by creating a digital footprint, creating a payment behavior of yourself, then you allow banks or financial institutions to understand you more, create a profile based on your payment behavior, and therefore are more sort of, it's easier for them to sort of understand you and lend you money. So that is very important in terms of the digital payment system, and we try to promote that and bring everyone onto the digital payment space. Of course, there's always been challenges in terms of digital literacy, in terms of access to internet, in terms of access to electricity, particularly for a country like Cambodia. So it's a long way to go, but I think we've made progress so far that we're quite satisfied with. Yeah.
Great. And Your Excellency, given Bahrain's infrastructure is pretty well advanced at this point, how will you find new sources of growth for your financial sector? I guess, what does Bahrain need to do to compete as a financial hub, perhaps against the UAE? And how does inclusion fit into that?
Absolutely. First of all, good afternoon, everybody. We'd like to thank and congratulate Singapore for an outstanding event, another one. Very happy to be here. I'd like to start off by sharing with you our journey when it comes to developing our economy. I'd like to focus on the last phase, the last 20 years, where we were able to grow an economy that started off 2002 with less than $10 billion GDP to a GDP of over 44 billion at the end of last year. We managed to achieve a growth rate of 8% while the world was growing at 5.5% because we digitized. We went through multiple steps. We started off by liberalizing our telecoms. There was one state-owned telecom operator, and we invited competition by foreign companies to come and compete with our company because we think it's for the better good. That was one of the reasons why AWS, when they were looking at our region, decided to build their first cloud region in Bahrain. That, amongst other things, the data jurisdiction law is a very important legislation. We were the first country in the world to do that. And that was one of the things that helped progress the conversation with AWS. We're one of the first countries in the world to have a nationwide 5G. Where we are today, we can say that 100% of the population is banked. There's an average of 1.4 mobile phones per person in Bahrain. And everybody has access to the internet. With that, that's just the beginning. This is the basic services. What we would like to discuss in the rest of this, because this is very important conversations, is how we want to build on the basic that we have in order to progress and make it not only more inclusive, but more useful and more inducive and for growth.
And what are the next stages of that? So what might we see in 2024?
Sure. Financial services is the largest sector in our economy today. It's very, very important for us. It contributes 18% of our GDP. It overtook oil end of last year. In order for us to continue to have a thriving financial services sector, we need to protect the traditional players, but we also need to welcome the new players. And we need to find the right balance between protecting and encouraging innovation. It's very important for us because we know financial services being disrupted, future players are not going to be identical to the current players. We need to make sure that we encourage the people who are willing to innovate, willing to develop. And the recipe that we have is to focus on the first principles. It's regulation, compliance, and governance. Compliance, you have to protect the consumer, you have to protect the system from bad money. Regulation is if there is a problem in part of the system, you need to make sure it doesn't spread to the whole system. We've learned from the global financial crisis how a problem in one institution can very quickly contaminate the entire system. And we need to have regulation to protect that. Small mistakes are okay if they're contained. Big mistakes are very, very difficult to overcome. And last but not least is governance. We want to encourage a process of good decision making. It's not that good decisions will always be made, but the process can ensure better quality of decisions where we protect the shareholders and we protect the employees and the staff and the members of the team by making sure that there's an adequate process rather than just individual decision making. It's more of a process, more institutionalized to make sure that all elements are considered before making a decision. If we find innovation that protects the system through regulation, that makes sure that interests through compliance are safeguarded against, and to make sure that the governance is right for any new institution that wants to come and be part of the development of financial services in Bahrain, I think you would find the right balance. And it has to be risk-based rather than rule-based. We still don't know what the future rules are going to be. We need to work with industry. We need to work with the players and figure it out together. It's very difficult to say now that we know what the future regulations are going to be. If we think of the first principles, we should be part of that journey with the industry to find it. That's what we're betting on in Bahrain, is if we have an open mind with the new players and have a dialogue with them, we should be able to encourage them to establish and develop and grow in Bahrain, and hopefully they will become the future leaders of financial services.
And Governor John, I think Rwanda has a target of 90% for formal financial inclusion by 2024. That's very soon now. So can you give us an update on where you are in relation to that target? And I'd also like to add on to that, specifically, what are you doing to integrate women into your financial system more, and how's that going?
Yeah, thank you. Thank you, Sarah. Maybe speaking generally, we are talking about how digital innovation has enabled inclusive growth. And so looking at the bigger picture of Rwanda, from back in 2001, when we did our long-term growth or economic development strategy or vision, what we call Vision 2020, we highlighted technology or ICT as a pillar to the development of our country. So you see technology in all aspects of our development agenda, but focusing on financial inclusion that you asked me, way back when we first did our survey on financial inclusion in 2008, we had only 21% formal financial inclusion. That was in 2008. And from 2011, we introduced the mobile money services. When you look at what we had in the first year as electronic transactions as a percentage of GDP, then we're just at 1.3% of electronic transaction to our GDP. Fast forward last year, we had reached 160% electronic transaction to our GDP. So it shows what the movement has been, but what does that mean in terms of now equality, having many people really benefiting from this digital drive. Back to financial inclusion, from 21% to 0.08, by 2020, formal financial inclusion had moved to 77%. And of this 77%, 61% is contributed by mobile money, by digital financial services. They really contributed a lot to the drive in the growth of financial inclusion from 21% to 77%. And part of that were also initiatives for reducing the gender gap. And Rwanda, again, is a country that has really initiated a lot of policies and actions that help to ensure inclusive growth for all and women in particular. So whether in politics or what, women inclusion is a key factor of our entire agenda of socio-economic development. So when we did our FinScope survey again for financial inclusion in 2016, we had the gender gap at around 11%. When you compare financial inclusion for men and financial inclusion for women, the gender gap was at 11%. And by 2020, this had reduced to 7%, from 11% 2016 to 7%. So there are different initiatives that really target women, and are now addressing your specific question on our target of achieving 90% by 2024. We are doing the next survey next year, so we don't have really the numbers of the overall inclusion today. But when you look at the numbers I used of electronic transactions as a percentage of GDP, in 2020 when we did our survey, that was just before COVID hit the world. That's when we released these numbers. By then, the value of electronic transaction to GDP was around 47%. That is 2020, and today we are at 160%. And most of the financial inclusion drivers have been linked to the digital transactions. So we have confidence that by next year, when we get results, the numbers will be around our 90 or even past 90%. And we have targeted initiatives for women. Take an example, we are the central bank. We've initiated a product where our teams have gone to 3 of the most excluded districts in our country, where women are most excluded. And we've identified women with no phones, with no mobile money accounts, and we brought them together. We're educating them about these products, and we are working with other stakeholders to provide these women with a phone and initial money on their mobile money accounts. And so at least we want to start with these 3 and give an example of what we can do as stakeholders to help drive financial inclusion even faster for the women that are excluded. So there are other initiatives really that I've just highlighted overall inclusion, but when you go into detail on debt, access to debt, when you look at what has happened with the digital loans, where we were 5 years ago in terms of people that were accessing loans from banks, this has more than doubled within just 5 years because of digital loans. In fact, today, personal loans, 77% of personal loans are digital loans. And most of these beneficiaries of these loans were originally excluded completely from access to these loans from banks. When you go to pension, we had a national pension fund that had only 570 subscribers. Then the government introduced a universal pension facility using digital channels, which we call Ejo Heza, and that means a better tomorrow. And today it has moved from 577 to more than 3 million subscribers for their pension. So we see how digital channels are really impacting on people's lives, especially the bottom of pyramid of our population.
Wow, congratulations.
Thank you.
Those are some significant numbers, significant progress. And before we get into some other specifics, I'd maybe like to step back a bit and ask about the broader global economic outlook. That's something I'm sure you all have views on, and it will affect everyone sitting in this room, as well as all of you and your jobs and your policy decisions. Maybe first to Your Excellency, especially given the situation in the Middle East, what's your outlook for 2024? And how will you balance that hunt for innovation that you talked about before against those near-term uncertainties and pressures?
Thank you very much. Very important question is the outlook, it looks like, and there's consensus around this, is that the global economy is slowing. The question is whether to go into a recession, that's the question. But the slowdown is clear. There's multiple impact of that, and it's manifesting itself in multiple forms, including the price of shipping containers and everything else. For us in Bahrain, growth is important, but there's multiple other priorities that we also need to consider. It's inflation, it's employment, it's growth, and it's fiscal. We try to find the right balance between all of these. We think that even if the world slows down, we should be able to continue our above par growth because we have plans. We have a young population, we have a talented population. We should be able to find opportunities for them that will encourage growth in the region. And we're seeing, I represent an investment promotion agency. We spend a lot of time speaking to businesses from all over the world. There's more and more interest of deploying more resources in our part of the world. We're one of the few regions, the Gulf Cooperation Council, it's 6 countries. Bahrain is one of them. We're one of the few regions in the world where we're able to continue to grow above par. And with that, there's opportunities for multinational companies from all over the world to identify the right opportunities for them in the GCC. It's not going to be easy, but I think with a plan, with balancing multiple priorities, we should be able to continue to grow. It might be at a slower rate, but we think we should be able to maintain above par growth, at least above the average of the world.
And Governor Chia, how will emerging Asia weather the slowdown in China specifically? And when you think about your targets for financial inclusion, what do you think is achievable in 2024 against that backdrop?
Maybe I just come back a bit for the question you had for me initially about the linkages between digitization and economic growth. I don't think there is any study done on the correlation between digitization and economic growth. There's no such data yet, as far as I know. But I can tell you some observable phenomena with the effort of digitization. I mentioned the increased amount of people making payment digitally. But if you look at, what does it mean for small businesses? It's very significant because now they can accept payment from anyone without having to worry, first of all, how to give changes. Payment is made a lot faster. People don't have to worry about carrying cash, particularly in a country like Cambodia when we're very much dollarized and the local currency carry a lot of zero behind it, and so people have to carry stacks of money to make payment. Now they don't have to pay it electronically. You look at the numbers, another observable phenomenon that I saw is on Facebook. Everyone are selling online. It's so easy now to make payment that everyone think that because now I don't have to open a shop to sell anything, it's a lot cheaper to just post it on Facebook and I will deliver it and I get the payment electronically. This is another phenomenon that we have observed as well, and this is in addition to the fact that they now create a digital payment footprint. So how do we position this in a much, in a global context, right? And your question is, what will happen? Because there's a lot of uncertainty for everyone in the world, not just in Asia. We were scarred by the pandemic. The fiscal space has been reducing. Every government has spent so much during the pandemic. We forgot what come next, and every time there's surprises. There's also, pressure on our inflation. There's pressures on exchange rate, on interest rate, and there's also, climate change. Now, the effort of digitizing the economy would also help domestic consumption, would also help our SME. And this is why it is important for countries to go to that direction, because in a way you'd make yourself more resilient, because you know that the economy can be more efficient in a certain way. Also that people your SME would be able to also sell across the border. And this is important, to have, for Cambodia, we've signed free trade agreement with a couple of countries as part of the RCEP as well. That would also help our SME to go across the border, and having a proper, digital payment platform would help these kind of transactions.
It sounds like a lot of work underway in many different facets.
We're very much a manufactured-driven, export-driven countries, and so robotization.
Okay.
To help companies to robotize some of the processes and create a more value-added manufacturing, and not just on the low value. At the moment, mainly it's garment and shoes. What we aim to achieve is to create more semiconductor, which we've already increased our export on that. And these are some of the sort of the works that the government has been working on, and hopefully, make ourselves more resilient in the face of these uncertainties.
Okay, great. And maybe Governor John, picking up on some of those challenges that Governor Chia just talked about, what do you see as the biggest barrier to further digitization right now? Obviously, funding, technology, human capital, lots of things have to come together, to make projects happen, to make them successful. Which part of that equation is the most difficult to unlock at the moment, and what can policymakers do to help encourage that?
Yeah, I think, as you said, in the bigger context, the challenges we face today at the global level affecting most of the economies, especially on inflation. Almost every country has been hit with inflation and with exchange market turmoil. So that has affected the economic performance in general across the world. And but when you look at young economies like ours, we still have fertile lands to cultivate. So any seed you grow with the minimum amount of fertilizer, you get good results. So we just need to do the right thing, the right policies, and because any FDI of the amount of tens of millions will make a difference in our economy, unlike some big economy that we want in billions of dollars. So I think our biggest challenge over the last 2 years has been mainly on inflation. That has gone to levels we've not had since 2008 during the global financial crisis, of moving to double digits. But that has been on a downward trend, and 2024 we see it coming back to around 5%, which is our medium-term target. So that is our key preoccupation, to ensure investors that there is economic stability. And so we don't see any big challenge in terms of the FDIs coming to Rwanda, because when you look at over the last 2 years, despite the challenges, which is continuing to increase. And the other big driver of our growth has been tourism. Of course, we were hit badly during COVID. That pushed us to negative growth. But after COVID, we've seen really tourism resurging and almost hitting the pre-COVID numbers. And so that has sustained our economic recovery plus other sectors, of course, manufacturing and construction. So we expect average growth of around between 6 and 7% over the medium term. Of course, just after COVID, we had 10.9, 9.2. This year, we expect around 6.2 and 6.5 next year. So average growth of above 6%, which is healthy based on the global challenges we live in today. And when I look at the infrastructure investments already done in our country, so what is required today is really innovative products coming onto the market. I think we already have really healthy infrastructure backbone that can support new digital products coming onto the market. And these don't require a lot of capital to innovate different products. So I think depends. Unfortunately, we're living in a world that is full of uncertainty. So you can't tell what will happen tomorrow. Otherwise, I would say if Middle East doesn't worsen beyond what we see today, sort of getting used to the Russia-Ukraine war, and so maybe we think for us, we don't see any big setback on our innovative journey going forward. So yeah, we expect to continue reaping from the innovative products that are making a difference in our economic development journey.
Great. And thank you to those of you in the audience who have been submitting questions. I'll throw one in now. Perhaps to you, Your Excellency, given that you spoke about that innovation and risk management approach earlier. Someone has asked, how do you ensure that emerging global standards, for example, like CBDCs, are not punitive by being too developed market-centric?
Yeah. The best way to do that is to partner up with industry. We speak to many of the global companies. They have a presence in advanced economies, and they're looking to expand. They're very keen on establishing relationships with smaller countries in other parts of the world. Anybody who's willing to listen to them, who's willing to partner with them, there is room to have a conversation, and that conversation could be very, very fruitful. What might not be possible in a big country is possible in smaller countries. And this is what we think the advantage, that if people talk to us, we can have a two-way conversation on how we can partner together to progress technology from its current stage to the next stage. I'd like to speak a little bit about an opportunity that we see. Yes, it's true. Almost everybody has access to banking services. And the same way we speak about underbanked or unbanked individuals, you could say the same thing about businesses. I think even in Bahrain, we can improve banking services to small and medium enterprise. It's very important with that. And we clearly know a well-banked business employs bankable individuals. And there is a link here. What we need to do is, we know SMEs in the US are responsible for roughly 2/3 of all jobs in the private sector. In Bahrain, we are hovering slightly below the 50% mark. We know there's upside there. And as a government, we're studying all the different options and possibilities of how we can help make sure that small businesses have adequate access to finance. And we believe that fintech and new technologies will be part of the solution. The digitization of the offer will help financial institutions provide needed financing to small and medium-sized businesses.
That's a great point. Obviously, inclusion matters for individuals, but it matters for businesses as well. This is another audience question. Thank you. I'll direct it to Governor Chia. Do you view financial literacy, particularly of lower income segments, to be a stumbling block in moving toward a digital world?
Yes, I think definitely financial literacy, digital literacy it's a big challenge for financial inclusion, particularly as we're moving fast into the digital space. I think there needs to be a lot more work to do. But when we talk about financial literacy, this is not something that you do a one-hour sessions and everyone understand it. It's a long-term sort of efforts that needs, to the second question, public and private sector partnership. And I always think as governments or regulators, we're like parents, and the private sector as children. An example coming from a woman, and to have a harmonized household, you have to have the children and the parents happy, right? So when as parent we try to impose too much or dictate or too much prescriptive on what the children can do, it's not going to work, because the children would not grow, they won't be independent, they will coming back to ask the parents, what should I do next? What should I do next? I think the best way to do is to encourage them, to help them. And if you have a child who is lacking a bit, you should help this child, but you shouldn't do everything on their behalf. And therefore, having this private-public sector partnership is really important, particularly in the area of financial inclusion. It's something that we as government, we should do, but I think it's also something that the private sector should also put an effort in. And a lot of time, private sector don't like to do something that's not quantifiable. When you look at financial literacy, they say, well, how do I gain from this? What are the KPI numbers? And there's none unless you sit the whole population in a test or an exam to see how they've improved. It's impossible. But it is something that is important to be done, and I hope that there's more sort of effort in that space from not just public sector, but also government, but also development partners and philanthropic funds or whoever that who can come into this space.
I wish we could continue this conversation for longer, but we are out of time. Governors and Your Excellency, it was really heartening to hear about the progress being made, and I think we all hope that 2024 is a year of milestones for financial inclusion globally. So thank you for your time and your insights.